I'm here to discuss the tax rules surrounding property repairs and maintenance with BDO tax experts Mark Lodder and Iain Craig. Hello to you both.
Hi, Madison.
Mark, how does a property owner know if they can claim a deduction? How is that defined in the eyes of the law?
This is where the Act leads us down a fairly merry path. So we always start with, are we spending money to make money? So are we looking to earn some income? That's our most important starting point. Then the second part is to work out whether or not there's some form of a limitation. So our Act says you can't claim expenditure for a capital expense. You can claim depreciation, but we're talking about upfront claims. Capital, we look for the definition of that, and we don't have a definition. So we turn to case law, our interpretation of the case law, together with what the Commission of Inland Revenue says. Courts are really helpful in determining whether an amount is capital or revenue being your repairs and maintenance, able to claim a deduction up front, and we have a two-step process. So luckily it's not 20, it's two. So the first step is we identify the relevant asset. So what are we dealing with here? Are we dealing with a car? Is it a piece of plant and machinery? Is it a property? Is it a subset of those which we've treated as a separate asset? What's our asset? Then the second part is to work out the nature and extent of the work undertaken. And that's where the trick comes in. And there's a lot of things that we look at here. Have we improved the property? Have we substantially replaced? Have we changed the character? All of those types of things come into play in working out whether or not something is a deductible expense as repairs and maintenance.
Iain, do you have any examples of how this works in action for us?
Oh, yeah, this is a great thing because repairs and maintenance it's easy if there's a broken toilet and you go and fix the toilet. That's a repair, that's deductible. If you're doing annual maintenance, it's clearly deductible. It's where you're at the threshold. You know, if you've got a leaky roof and you replace part of the roof, that's probably okay as a repair. But if you have to replace the whole of the roof, have you improved the functionality of that building? And that will, because you maybe used colour steel when it was corrugated iron before, or you've put in extra insulation, or you've repitched the roof and various things. And it really comes down to the two-step process about analysing each set of facts and circumstances and then comparing it to the case law and seeing which side of the improvement or which side of the fence does it fall on. Is it I'm fixing the leaky broken roof and the amount of work I'm doing to it is still enough to just be a repair, or am I improving the building overall by replacing the whole of the roof and doing more work to it, and that's then an improvement? Of course, depreciation on commercial buildings is 0%, so the incentive to get into the repairs and maintenance side of things is quite high. And that's where investment boost, which is a 20% deduction, at least offers some concession if you fall on that capital side of the line.
So that does apply?
That will apply to a new depreciable property item that is an improvement to a building.
What about newly acquired assets? Is there anything to be aware of there?
Yeah, that's a great one, and there a lot of care is required in relation to them. The simple, I'm buying a rental property, I think I'll replace the kitchen, do the bathroom, give it a fresh coat of paint, and get it ready for renting out. That would be capital expenditure, even though some of that work would have generally been regular repairs and maintenance. And Inland Revenue have issued a couple of interesting technical decision summaries and questions we've been asked, where they're identifying things like, if you buy something and you identify there is some essential initial repairs to be undertaken, then it's implied that you paid less for the property because you knew you had to spend that money, and you then go and spend that money before you start putting it into the income stream, then that's capital in nature. Whereas if you buy something, you rent it out for 2 or 3 years, or you use it for a period of time, and then take the time to fix those things, they're probably repairs at that stage. But because they happened so soon after you acquired it, you basically built it into the purchase price of the property. So we have to be very careful in those circumstances.
Certainly. Mark, any more tangible advice for anyone this applies to?
I think there's probably 3 or 4 areas that would surprise people. And touching on Iain's point, so you might have bought a property that's unfortunately leaky. You might have bought a property for rental that doesn't qualify as a healthy home, or you might need to do seismic strengthening. All of those things, unfortunately, capital expenditure on fixing those types of things. I'm not sure if I wholly agree with all of those outcomes, but the Commissioner's view is that certainly from it, so if we think about healthy homes, seismic strengthening, code for leaky buildings, etc., a change of code or change of law, getting a building up to standard, would be deemed capital expense.
Because it's an improvement.
I think that's the angle, correct.
Iain, anything that would or could make this easier for anyone?
Yeah, I think, what I said before was it's all dependent on the facts and circumstances. So how well you build your case and record your case as to why the work you're doing is not so extensive that it's in the improvement area. So photos before and after, clear documentation around what you're telling your architects or telling your people what to do, keeping good track record of the expenses, and also understanding the functionality that was there before, the functionality afterwards, and then trying to replace like with like, so that you're not, if you're replacing, well, it's probably a bad example, but replacing windows with double glazing, that's possibly an improvement. But if you replaced it with single glazing, that should be okay.
Great advice. Thank you both so much.